Yeah. So another kind of market related question: with so many people changing jobs and other people, being recruited, how do you value like a ES or a stock ownership option plan or a stock employee stock purchase plan when looking at offers?
Yeah. So in my own family, one of my relatives was offered a job at two places. This was a while back, but early 90s, mid 90s. So had a offer from Hewlett Packard and an offer from Cisco. Right at that time, Cisco was all of 250 people. Right, so small company. Um, and so she asked me to do an analysis on the two companies just from a standpoint as a stock. And so I think whether or not the company offers a stock option program of any type, um, you need to take a look at the company from the standpoint as if you were going to invest in it. And which one would you rather invest in? And so I told her, well, I would invest in Cisco. Matter of fact, I did. That's where some of the money came from to build this house. And I actually found it because of that research I was doing for her. She took that job, and the rest is history. She did really well with those stock options up until 2000. When the market had a hard time with all of those stocks. So that would be my recommendation. The program itself is important. How many options you can get, how fast you can get them, what the vesting schedule is. All of those things are important. But if this company isn't going anywhere and they're not growing, and on hindsight, the differential between a stock option program at Hewlett Packard from mid 90s to now versus at Cisco, you were a lot better off at Cisco, even if they gave you less options. So I would start with the analysis of the company and dig into the financials, especially if it's public already. That makes it easier. What are the revenues? What's their earnings growth? What do the analysts say about that stock? What are the expectations for growth over the next 2 3 years? Those types of things you need to kind of analyze those pieces like you would an investment. What does it look like on the charts? And, is it just, languishing or not? What's the relative strength of that stock versus the market at this point in time? All of those things. Those are more important to me than the actual program. That would come first. Pick the company that I liked that had the best, possible rates of return in its stock. And then if you had some tiebreakers, it would be which one gives you the most in terms of those stock option programs.
So how does that differ when you're talking about, I guess, pre-public companies, say you're looking at like one of the tech startups in the Bay Area. Do you put kind of value on having the option to buy like stock from these pre-IPO companies, or do you want to like look more for hard benefits that you can evaluate?
No, I'm personally, if it's me, I'm definitely looking for that big payoff. If I'm going to go that direction and I'm working for a pre-IPO company, a lot of those companies do have some valuation metrics because they've been through some seed capital. At least you can ask some questions about that and see what the company was worth in the last round of venture capital seed money that came in, that type of thing. It's a little bit harder to really dig in and figure out. You can't look at a chart. There's no financials that are very easy to see. It also probably depends on how much in demand you are. What it's one thing to be, if you're begging for the job, they're not going to maybe tell you as much as if they really want you. And then you might be able to extract a little bit more data about how that company's doing and what the expectations are and when they might go public. And I would be probably more concerned then about what I was being offered, how many options and how fast, what's the vesting schedule, that kind of thing. So, yeah, it's a little bit different in the pre-IPO arena, but yeah, that can work. Instagram was what this little company. I think there was 9 people working there in this little office in San Francisco. When Facebook bought them for $1 billion, there was a few people there that made some good money. So for every one of those, unfortunately, there are a whole bunch that we never heard of before because they didn't work. But it's still Matter of fact, I had a neighbor across the street that went through three of them, and none of them ever quite made it. So he worked very hard, as you don't normally do at those firms, and didn't get a payout. The options package didn't matter because the companies never got public. But so it's one of those risks that you take, but that's what you should be probably doing in a company like that, to be honest, especially if you have a good skill set, is looking for that kind of home run scenario personally.